Okay, folks, good morning and welcome to Swing Trading Today. This is Bob Desmond, and it is at current 4:48 in the a.m. Eastern Standard Time. Let's get to what we're going to talk about today. We're going to talk about the yield curve, not the short duration yield curve. I'm talking about the Pimp Mac Daddy of them all, 2s versus 10s, and that chart looks like a bloodbath. Then we're going to segue into threats to the market, threats to the geopolitical landscape. And then we're going to segue over into, as I tweeted out last night, members' stock chart requests, which is where we review symbols that our members submit for me to review, as well as a trade we just closed out and trades that we are looking to open up. But before we go to our agenda items for this morning, let's talk about our sponsor, which is TrendSpider. TrendSpider is the next generation in automated technical analysis. This is their chart in front of you. This is by far the most efficient and affordable piece of technology that you'll have at your disposal to analyze stocks, learn technical analysis, all by the click of a button. What do I mean by that? Want to see trend lines? No need to draw anymore. All you need to do is this. You want to see daily trend lines on a daily chart? There they are. You want to see monthly support and resistance on a daily chart overlaid? Click a button. There you have it. This is powerful stuff. And these are only a couple of pieces of the functionality that they have. I will be on a webinar with TrendSpider this coming Sunday. They've invited me back again to talk about a couple of trades and how I use TrendSpider to do the analysis. So please, click the link below. Join us this coming Sunday, the 18th. There's also another link below bringing you to their website to check out for a 7-day free trial offer. Please use discount code CT25Z. Again, CT25Z. That gives you 25% off. Let's get to the markets. All right, so this chart here, what you're looking at is the yield curve, 2-year versus 10-year Treasury yields. And you can see that for the month of July, we broke the lower band of support. And the last time I spoke about this chart was on YouTube, and one of the comments I got back was, quote unquote, give me a break. Well, it has broken, because for the month of August, we are now breaking down to, in essence, a flattened yield curve, and we are 1 basis point away from an inversion. What does that mean? Well, the yield curve, 2s versus 10s, other yield curves have been inverted for quite some time now, but 2s versus 10s are very critical because they have signaled recession out of the 6 or 7 recessions past that we've had. So this is significant. Do not dismiss this. And while we still have half the month of August to rally back, it does not look promising. We are rolling over on Stokes, rolling over on RSI. We are holding support on Ultimate Oscillator. We do have a higher low on MACD, but still we are putting in lower highs. This is a weak chart with very little observations that I can make that are optimistic. For the most part, net, this is a bearish chart. And overlay here, I have in gold, of course, gold. And what has gold been doing, and what has it traditionally done when the yield curve flattens and inverts? It rips through the ceiling. Why? It's because the Federal Reserve needs to open up the spigots, cut interest rates, and as they did back here during the financial crisis, they opened up the spigots on QE. And they began buying back our own debt, quantitative easing. And that's what we're going to see yet again. But this time, it's going to be bigger than the last time. Now, there may be some out there saying, Bob, President Trump took the tariffs off the table for the Chinese. So what? We're still in a trade war that's gone on for over a year now. It is hurting business on both the Chinese side and in the United States. But we do have other catalysts out there, because this trade war has little hope of ending anytime soon. Why is that? It's because the Chinese want President Trump out. They want a puppet in here, just like you had Obama was a puppet, Clinton was a puppet, Bush was a puppet. They want another puppet in, and they want him out. As much damage as they can help do to this American economy between now and the elections, they will do it. Now, I mentioned that there were two other catalysts out there. The first is a hard Brexit, and it's looking increasingly more likely that is the path that the Brits are going to take. We have John Bolton that's been visiting over in the UK, the largest presence of U.S. diplomats in the UK in quite some time. The current administration can't stand the EU, and for a lot of reasons that are very, very credible. I mean, they are a totalitarian regime in the EU, and if you see a hard Brexit, you are going to see the euro plunge. You're going to see the dollar rally along with gold, just as what we saw back during the Brexit vote. You saw a correlation for a short period of time between gold and the US dollar. Each rallied very, very aggressively. I would expect to see the same. Lastly, Hong Kong. Hong Kong has a very special place in global finance. China, for all of its bluster, has very little credibility in terms of monetary strength. All they do is they go to weaken the yuan when somebody backs them into a corner on trade. That is not a sign of a powerful economy. It's a sign that they do not take their currency seriously and they use it as a weapon. And Hong Kong has been their jewel of credibility ever since 1999 when the Brits gave it back up to the Chinese. And they are about to kill the goose that laid the golden egg, which is credibility, special trade rights with the rest of the globe. And the fact that you have Hong Kong protesters flying the U.S. flag and singing the national anthem, the Chinese aren't going to stand for that much longer. The optics are horrible for the communist thugs over in China. So these are the main catalysts out there. There are many others, whether it be Venezuela, whether it be potential war with Iran, whether it be the South China Sea. There are a lot of flashpoints out there, but these are the hot topics. Why? It's because they are happening right now. And there are no signs that we are going to see an alleviation of these tensions anytime soon. And the alleviation of any tensions probably aren't going to come through peaceful resolution. It's going to be economic disaster in the short term anyway over in the EU. And unfortunately in China and Hong Kong, probably a lot of bloodshed. So very sad. All right, let's segue over and into our member stock chart requests. We're going to kick things off with gold using the GLD. Now, I had been warning members that you need to be very, very careful of the price of gold because we were flashing topping tails. And that is a sign of indecision. I woke up yesterday morning, being the 13th, at about 4 a.m. I took a look at my phone because we hedged our gold mining position a couple of days earlier, and I was looking for a break on gold, and unfortunately, in the pre-market, gold was spiking about $22 to $24 per share, and I said, wow, this is either a major breakout or it's a blow-off top in the short term. Longer term, I'm still very bullish on gold. As it turns out, we had a big outside reversal day yesterday. It was, for all intents and purposes, a blow-off top. You're not seeing the intraday price action on this chart here because it's the ETF. But if you take a look at the continuous contract, you'll see that. We surged higher only to reverse. We took out the lows of last week. But what we did was we filled the gap, which opened up here on the 7th. Now, why do we peter out here? All you need to do is take your automated trend lines, throw them up there, and you can see that we had resistance above. So if you're just simply looking at the topping tails and you're on TrendSpider and you want to validate your opinion that, wow, you know what, in all probability, we have resistance above, simply click a button and there you go. There's your resistance levels. This automated technical analysis, TrendSpider, is available to members included with our silver and gold memberships. Titanium members can get a discount. Now, the fact that we rallied back off the lows of the day to close back above support leads me to believe that we may have had a flash correction in gold, and we may trade somewhat sideways with a bias to the downside, but the trend is overall intact. Let's go to a weekly chart. RSI is still continuing higher. Stokes is still continuing higher. Now, taking a look at the shares on an intraday basis, a 4-hour basis, you can see that we are in an ascending wedge formation. Not my favorite. We are seeing lower highs on RSI and lower lows. Stokes are rolling over as well. Same deal here. Lower highs, lower lows. So for a short period of time, I think that we may get, again, a consolidation with a bias to the downside. Now, what we did do is we did hedge our gold mining position. We are long of NUGT in a very big way. We have been long for quite some time, enjoying this rally up higher. But I wanted to protect profits. So what we did was, last week, because we saw these topping tails on the NUGT, again, implying that we have resistance above, and to validate, we put our automated trend lines up and we have resistance above. So we wanted to protect those profits by hedging 25% of our position using the DUST. And you can see that back here, last week, the DUST was consolidating. As we saw topping action on the NUGT, we opened up long and we booked those profits yesterday on NUGT weakness. Now, am I predicting that NUGT is done going down? No, I think that the easy money to the short side has been made, and that you run the risk of owning an ETF which has been weak and runs the risk of getting weaker, while NUGT has been strong and runs the risk of being stronger. So I don't want to fight the trend despite the fact I'm a contrarian. Now, RSI continues to put in higher highs, as do Stokes, but I'm not trusting the price action yet. Now, were we to pull back on the DUST, put in a higher low or even an undercut double bottom, and then begin to break out to new higher highs, then I get nervous about being long of the gold miners longer term. Shorter term, though, we haven't put in a retest of recent lows yet on DUST, so I'm not all that concerned yet. But I'm keeping an open mind as always. Moving on to other positions that we're watching to put on. The UGAZ. I spoke about this with members on Market Wrap last night as a potential trade. Our trade alert was triggered on UGAZ as we closed above the upper band of this downtrend channel. And you could see that RSI is rising, Stokes are rising, 4-hour chart. Again, a nice breakout on a 4-hour basis. What I would like to see is a retest of this breakout point. And it's at that point in time where we may be looking to go opening up a new long trade. If you don't hear me talking about UGAZ on either best stock charts or swing trading today, there's a strong probability that we are long of it or it's come off of our watch list, one of the two. Let's segue over and into silver. I'll be talking about this trade on the webinar with TrendSpider Sunday evening. And we booked profits on UGAZ, about 14%. And you can see that yesterday we had a pullback very similar to gold. Now, I think that a lot of the selling may have been done already, but we're looking for a good risk-reward entry point. This is a 4-hour chart. Now, when you overlay on a 4-hour chart, the weekly support and resistance levels as represented in dashed line, you could see that we're struggling here to rally through the 86.98 level on USLV. So I suspect that we'll probably get a continuation pullback sometime this week. Perhaps support will be found at the 20-period moving average, which is rising. For an extreme pullback, perhaps a pullback to the $80 per share level. and we'll look to revisit the trade at those levels. Or if we break out and above resistance, then we'll look to open up a trade, assuming that we appear poised to close above those levels. Intraday price action does not impress us at all. We want to make sure that we are set to close above resistance levels, because those resistance levels will act as our stop loss point if in fact we appear poised the following day or weeks to close below that support level. So it's critical from a risk reward perspective. Moving on to SVMK. This is a 4-hour chart. I have weekly overlays represented. You can see that on a 4-hour basis. We rallied on the second, found a bit of resistance at weekly resistance on this 4-hour chart. We fell into a trading range, a triangle formation, and we're flirting with a breakout. We retested the lower band of support yesterday. Stokes are weak. RSI is weak. Let's go to a daily chart. Now, on a daily basis, you can see that while the 4-hour chart has given up support on RSI, the daily RSI, which had broken out here on the 9th, has pulled back and it is now retesting the breakout point. That's bullish. What I would do here is you can do one thing. One, if you want to scratch the itch, open up a small position, use a stop loss right below this weekly support level here in dashed red line at around 17.25, but keep it small. I would be more aggressive on a rally and a break above, and a close above, I should say, this upper band of resistance. That sets the stage for a rally up to weekly resistance at the 20.14 level, which is rising at current. That's SVMK, BIDU. So Chinese stocks just became a little bit more interesting because, frankly, President Trump blinked yesterday. I'm a big fan, but I call it like I see it. I will not let politics color my view of the facts. And the fact is, he blinked. And yesterday, Baidu, this is a daily chart, Baidu broke above the upper band of resistance. RSI broke out yesterday. Stokes are beginning to hook up. Moving on to a 4-hour view, you can see that we have a lot of congestion above here. This is a 4-hour chart with a 4-hour overlay of support and resistance. And we closed right at resistance on a 4-hour basis. Now, if we close above resistance at, let's call it $99 per share, I think the next resistance level is going to be $103 per share. Now, what if we get through that level? We want to bring up our daily overlays on this 4-hour chart. And you can see that we have resistance up here, which is declining at around, let's call it 114 per share. And that could be our next resistance target. So Baidu looking good. Remember, 4 hours resistance above. Watch for a break and a close above $99 per share. If we close above that level, it would appear as though we have a game-on situation to the long side. Assuming that the markets do not roll over, I will be rolling over and into the pre-market activity in a moment. The next chart up, ARC Innovation. This is a daily chart with weekly overlays. Not much happening here. We're in the middle of no man's land, so we need to drill down. Let's use a daily overlay. Oh, okay. So here we have rising support, which is good. That's bullish. We have RSI with a higher low and threatening to break out. We have Stokes, which we're looking for a higher low on and a hook back up. I think that these shares are very close to being bought. We do have a pivot point at around $46 per share. If we close above that level, it appears as though we have a game-on situation. Let's go to a 4-hour chart. Yeah, a rally up and through $46 per share will take us up to initially $47 per share. If we break above these two resistance levels here, we're coming up here to $48.77. So ARC Innovation is looking good as a potential long trade. Again, though, we need to take a look at the markets to ensure that they are moving up higher as well. On that note, let's segue over and into the pre-market activity. What I want to begin with is a chart of the 30-year bond price. It is moving higher. Very, very bullish price action here. When you see the 30-year bond price so bullish, that means that yields are moving lower. There's a very good chance that yields invert today on the 2-year versus 10-year yield curve, assuming that we get a breakout. Remember, we only closed 1 basis point away from an inversion. If we do invert on the yield curve, this will be the first time in 10 years, more than 10 years, that we have inverted. Very, very significant. Taking a look at the stock market futures, we are down this morning by about a half percentage point. We had rallied and closed above resistance levels. This is a 4-hour chart. These will all be 4-hour charts. We rallied up and through resistance yesterday. This morning, we are giving up that support level, and we are making a continuation move lower on this new 4-hour bar, which opened up at 5 a.m. At current, it is 5:21 in the a.m. Taking a look at the NASDAQ, very similar price action here. We closed above a support level. This morning, we're giving it up, putting in a new lower low on this 4-hour bar. This 4-hour bar will close at 9 a.m. And we are down over a half percentage point on the morning. The U.S. dollar holding gains seen yesterday. No break of support yet. If the yield curve inverts, that may become a different story. If the yield curve inverts, it's going to be a foregone conclusion that the Federal Reserve, if it's not already a foregone conclusion, that the Federal Reserve will begin to cut rates even further and more aggressively. And then it's only a matter of time before we get a new round of QE. And they won't call it that. They'll call it cupcakes and dandelions, but it's coming as sure as God made green little apples. Now, when you're taking a look at the dollar, you have to take a look at gold. What's it doing this morning? We had a weekday yesterday. We're holding support here at the 1510 level. We have a lot of resistance above, so I wouldn't advocate putting on a new long position here or adding to existing positions, but we will get an opportunity to add more to our gold mining trade. We're not ready yet. We took the profits out of DUST. It's sitting in cash right now, reserved for adding more to the NUGT trade. Taking a look at natural gas, as we pointed out on the daily chart and the 4-hour chart of UGAZ on TrendSpider this morning, we are moving higher on UGAZ, showing strength, but I do think that we will get a pullback. We will not chase it. I discussed this with members yesterday that the 4-hour chart is very, very bullish. However, we do not have a retest on a daily basis. Therefore, I will not chase UGAZ unless we get a pullback and a retest on a 4-hour basis of this breakout point. I think it's coming. Don't get lured in. At current, we are leaning into the 3rd standard deviation Bollinger Band. You're seeing some shorts get squeezed, which is fine. As long as you understand what's happening, allow for the pullback. It's coming. The daily chart is not validating the 4-hour chart yet. Let's leave off with silver. Silver acting a little bit stronger than gold this morning, and we are attempting at current to recapture prior support. It continues to act as resistance. We closed right at support this last 4-hour bar. We're being rejected this current 4-hour bar. Keep an eye on silver. It is up versus gold being down, but keep in mind that silver had a lot of ground to make up relative to the price of gold. And that is it for this morning, folks. Everybody have a profitable trading day, and I will talk to you soon. Be well.